Hi, this is Vijay Bambwani, and I'm back again with you to teach you something more about behavioral finance and the behavioral aspect of trading. If you want to be a better trader, go and see a used car salesman at work. How he pitches for a car, how he tries to sell across a used car, what method and glib talking he uses to entice the buyer to buy a car which is actually overpriced. Believe it or not, this is exactly how big hands, smart money, operators, manipulators, call them what you will try and pull off on you in the market by influencing prices day in and day out, second after second, minute after minute, hour after hour. So here goes. If you observe the used car salesman, he will basically quote an extremely high price for a car. So if he knows a Hyundai Santro which he's trying to sell, which is an out of production car, he knows that the real value of the car is 50,000 rupees. He will start with an asking price of 100,000 or 1 lakh. Hey, we are all Indians. Who doesn't like to bargain, right? He knows that the potential buyer will ask for a discount. But what he has done is pitched a peg. A peg is what is called as khunta in Hindi, a nail in the wall. He has driven a nail in your mind around an anchor price of 1 lakh rupees. Now, if you're asking a discount, you're asking a discount based on that value of 1 lakh. So, if you were to tell him, and some negotiators are extremely hard-nosed, they can actually drive down the price by saying, hey, I want a 50% off and I want this car for 50,000. These are the guys who the used car salesman actually loves. He knows they're just throwing a dart in the air. So he starts to make a face, oh no, ye hamara kharid bhi nahi hai. This is below even my buying price. So no deal. I can at the best offer you a 30% discount. You actually shake hands with the guy and seal the deal. What have you done? You've actually bought the car for 70,000. You go home proudly telling your family, hey, I got a 100,000 rupee car for 70,000. Who's happier? Actually, it's the used car salesman. He sold you a car worth 50,000 for an inflated price of 70,000. You're not smart, he is. Which is what happens to us on our trading terminal day in and day out, especially in the first few minutes of trade. In my recent video, I had explained to you how the last and the first 3 minutes of trade is dominated by BTST and STBT type of traders. Buy today, sell tomorrow, and short today, buy tomorrow. So when the market opens, you will notice that the first 3 minutes of trade are extremely busy. By extremely busy, I mean the prices will start flickering very, very rapidly. This is all the BTST and STBT traders trying to square up their trades, book profits or losses. At this point in time, it is relatively easy for big money to influence the price, or rather manipulate it. So many a times you've made up your mind to buy a particular stock at a certain level, only to find that it's opened with a 3 to 5 rupee gap. Could this be a trap like a used car salesman trying to pitch you an overpriced price for a car that's worth much less? I would bet the shirt that it is. Stick to your guns. First of all, avoid the first 3 minutes of trade. Stick to your guns and see where the price settles. Let all the smoke and the dust settle down and then take a rational view. Many a times, I've saved myself from a potential loss in trading by not chasing the price. There are many more fish out there to catch rather than get caught on the wrong foot by overpaying for something which I want to sell on an intraday basis. Time is short. At 3:30 p.m., the equity market will shut. At 5 p.m., the currency market will shut. And at 11:30 or 12 midnight, depending on whether it's summer or winter time, the commodity market will shut. The worst thing a trader can do is fall into the trap of the used car salesman philosophy. So I would suggest you be very, very careful when you are tempted to chase the price, because this is exactly what the operators, the big money, the smart money, and the big institutions want you to do. If you were to simply avoid the first 3 minutes and the last 3 minutes of trade, you can save yourself from a lot of tears and trading losses. Before I sign off for today, let me remind you to click like on this video if you're watching it on YouTube. In the comment section, let me know what you think of this video and what are the topics you want me to cover in my forthcoming videos. Do not forget to share this video with family and friends. Do take very good care of your trades and investments. This is Vijay Bambwani. Bye-bye. Thank you. Also, do not forget to subscribe to my free email newsletter, Fast Profits Daily, and get my free guide, How to Trade Markets Like a Pro.